Welcome to today's more important analysis videos on Tuesday 4th of December with me, Richard, market analyst at Hantec Markets. There is a dollar corrective move that we're seeing through the markets today, and there is an interesting number of charts to reflect this. The first one I'm going to show you is the yield spreads for the treasuries, which are falling quite sharply. Certain points in the yield curve are actually going inverted, so that is an issue that is impacting the dollar. The dollar has corrected back towards the bottom of its uptrend channel, so it's not a million miles from breaking down. But look at this, Chinese yuan strengthening sharply against the dollar. That is a key factor behind the dollar's corrective move that we're seeing today. So subsequently, what we're seeing across the board is dollar weakness on the majors. We're also seeing sterling strongly higher. Now that's coming on the back of an announcement from the European Court of Justice Advocate General, who said that it is perfectly possible that the UK could unilaterally revoke Article 50 and stay in the European Union. No problems apparently with that. So that has again changed the game to a certain extent, and sterling has jumped strongly higher on the back of that. We're seeing gold higher through 1236. I'll talk about the technical implications of that in my chart analysis in a bit. But also we're seeing equity markets all roundly lower, actually correcting back. DAX below 11,400. That's interesting. You can see my analysis on the DAX on the website and the implications of that move. But I think that these are all interesting moves. That the rebound on equity markets was pretty strong yesterday, but filtered out, sort of flitted away towards the end of the session yesterday, and that's continued backwards. As sort of question marks have come out over how the US and the Chinese agreement has come from the G20 and what actually they have agreed to. So yeah, the equity markets have sort of suffered on the back of that. Now, in terms of data points today, we haven't really got anything. We've got the construction UK construction PMI at 930. It's a tiny part of the UK economy. Around about 6-7% of the UK economy is construction based, so it doesn't really make too much of an impact on sterling. But you could have a slight move, and it was a slight recovery actually that we've seen actually on the upside on that data point just released just now. Now my chart today is dollar Canadian. Now one chart I didn't show you, which I'll quickly do, is this oil price, which has strongly increased in the last couple of sessions. That's WTI, and that is helping the Canadian dollar to improve. And I talked about Euro Canadian yesterday. Well, dollar Canadian has been in this uptrend, and that uptrend has been broken as the Canadian dollar has strengthened. But look at the momentum on the indicators. So the indicators on momentum turning lower. Look at those stochastics accelerating lower. MACD lines crossing lower. RSI below 50. That is the lowest in a number of weeks, actually about 6 weeks. So there is a bit of a sea change that we can see on this dollar Canadian chart, and I think a close below an old pivot. This old pivot comes in around 131.70. If it basically bang on where it is now, hit below that yesterday, but didn't make it to the close. If it closes below that today, I would say that is changing the outlook. 31.25, that is a key reaction low. That is also broken. That would, I think, really does start to generate momentum in a corrective move. So that would be the inference there. So this outlook certainly seems to have changed in the last couple of sessions as the market has broken below these pivot supports, these old pivot supports. Now you could argue that there's a basis of resistance at 32.25 becomes probably a sell zone actually in that area now, so watch out for that. And you can see that on the hourly chart where the market has rolled over, taken more of a corrective momentum indication on the hourly chart. Momentum indicators there, if I can say it, around 50 to 60 seems to be sort of where the momentum is now sort of tailing off on the upside. So as I said, a breach of that 31.25 reaction low would generate some corrective momentum in this move, and would likely to see the retracement starting to kick back in. So I wish you good luck in your trading today, and I will speak to you later.